GTI is going through a huge transformation at the moment. We've seen in the last 3 years our turnover go from around $3 million in 2021 to approaching 30 million this year. And we have a number of new contracts that we've recently signed, which should grow that hugely again next year. I said we're running at a 89% compound growth rate over the last 3 years, and the future looks particularly good. Change the slides. Where we are different to any other loyalty provider in the market is that we have a platform that we've developed ourselves over the last 3 years, that when companies take on our software platform, that makes all of our other revenue in the services side and content side very, very sticky. We're currently running at 100% retention. We haven't lost a client in the last 3 years. And that's down to having put the platform in. So it's a highly configurable platform. We provide with it all of the loyalty services of design, implementation, program management, content, gamification, leaderboards, everything. We provide down to the design, web services and content. We're a one-stop shop. We have competitors on the software side. We have competitors on the content side. We have competitors in the services space. But we know of no other company that provides all of those services as a one-stop shop. And that's our big point of differentiation. Next slide. Across that, the different parts of the business have different margins. If we look, the core platform delivers about 80% margin, and it represents around about 14% of our revenue. But the beauty of that is, for every dollar we earn on the platform, it tends to generate somewhere between $10 and $15 of services and rewards contracts on those full service deals. The other parts of the business, the services that surround it, are typically sold at about a 40% margin, and that's about 12% of our revenue. And then the content that we sell, the lower margins, around 15 to 17%, represents about 75% of our revenue. So that is all driven by the platform driving those downstream services. Now that gives us an overall average margin of somewhere in the 22 to 24% margin on, as I said, we'll go into FY24 with a run rate of around about 40 million and growing. Next slide. Now, recently, the big game changer for us as a business, as I said, from a roughly high 20s to $30 million business for FY23, we've signed a new 3+3+3 contract with RACV, which will generate an additional 9 million in year one, growing to 13 million in year two of revenue. Now, it's particularly a game changer for us in that RACV is already a client that spends around about $14 million a year with us, but that $14 million is just content at that sort of 15 to 17% margin. But this new contract will be our largest SaaS contract. Now, that'll generate about 360,000 at the sort of 80% margin. But it will also mean we are entrenched into RACV as their platform to engage with their members. They have about 2.1 million members. And even previously in FY22, we delivered over 262,000 rewards to RACV members. So we're seeing that sort of jump from 4 million to 13 million in 24 and at least sort of 17 million in 25. But it also means that this scale of contract means that we can do any client that is out there in the market. You know, we've got clients in multiple industries, but moving into member-based organisations means that we'll have built the software that can handle sporting clubs, member organisations, RSLs, any form of member-based organisation we'll be able to deal with going forward. Next slide. So it's a growing contract made up of all of those components. They're taking all of our services to engage with their 2.1 million members. So if we take the average over that margin, going forward in 24 will generate about $1.8 million of margin, which if you look, our cash burn was less than that in last 12 months, will clock us over to being cash flow positive once this goes live. So it will cost us around about $750,000 in the next 4 months to build out these member services. But once we go live at the end of November, early December, the money will start to roll in and the expenditure will cease. Or I guess for a client this size, it'll never cease. There'll be ongoing work for us to do, but the bulk of the spend will have been done. In fact, we knew this contract was coming, so we actually started the build 4 weeks ago, and we're probably already a third of the way into it. There is a small phase 1 for a number of their affiliate organisations, which will go live on the 15th of July, which will start to generate a small amount of revenue. And they'll be used as the pilot for the larger core RAC business, which will come over in November. So the exciting thing for us is a member organisation the size of an RACV is effectively outsourcing their member engagement to us. And that's the software, the services, and the rewards. And this contract will just continue to grow over the next 2, 3, 4, 5 years. So it's quite substantial in terms of the transformation of the business, the size of clients we're dealing with, and it is affirmation of our strategy to be able to provide all 3 components to our customers, because that's what they're saying to us that they want. Next slide. So as I touched upon, you know, it's 3 phases. The other thing is it will give us access to all of RACV's. It's approximately 17,000 travel products, whether that be holiday packages, accommodation, cruises, even interesting things like airport car parking. We'll be able to cross-sell their services as well to our existing 16 million users that we have through Wesfarmers, Alinta, and another Coles and a bunch of other large clients that we have. We'll have access to RACV products to cross-sell. Now, in that number of 8.8 million for FY24, this doesn't include any cross-selling of these RACV products to our existing client base. That's all additional upside on the 8.8 million. So we're very excited as to what these opportunities are. We're already getting some very strong responses from our existing clients as to the products we're bringing, particularly clients like Student Edge that has 1.1 million students on it, to give them access to cheap holiday packages and accommodation is an exciting opportunity. And to date, that's got a 0 value in this contract, but already we've had a very strong response. Next slide. So, on the back of that, we did do a $2.75 million cap raise, so we're no longer come raise. We actually were able to do that at a zero discount, and it was oversubscribed. So, we know there is demand out there, and when we get to people to understand our story, I think it's a very strong story, and we're getting a good take-up. Next slide. But it's not all about RACV. The interesting thing is we've had 9 consecutive quarters of growing cash receipts, and we know that Q4 of 23 will be our 10th consecutive record, because at the end of May, we'd already exceeded our Q3 cash receipts. So it's going to be a very, very strong quarter for us in terms of, we'd already exceeded our previous record after 2 of the 3 months of the quarter. So, we're going from strength to strength. If we look at 12 months ago, we didn't have any of our enterprise clients live. By the middle of next month, we'll have 5 live. Seagrass is a 72 restaurant chain around the world. They're in Australia, New Zealand, Middle East, and the UK. Their Hunter and Barrel brands and Six Head brands are already live, and their biggest brand, which is Meat and Wine Co. with 42 global restaurants, will go live in July. We also have signed up a large healthcare services provider who, because of their competitive advantage, don't want us to use their name, which I understand, because they're the first health service provider that is rolling out subscription-based pricing in Australia. So for $9.95 a month for individuals or $19.95 for families, you buy a subscription which gives you guaranteed bulk billing. Now, I think we've all seen on the news that bulk billing is disappearing at a rate of knots, and people can't access that. So in the UK, it's very common now to have a subscription service to enable you to get guaranteed bulk billing. Now, we've already, in the first 2 months, signed up over 46,000 patients across 7 of their 13 medical centres. We see by the end of the year that they anticipate that will be over 300,000 patients signed up to that program. So it's a phenomenally successful project. The other thing that's allowed to do with our software is people can just walk into one of their medical centres with their phone and tap, and it loads their Medicare and any private health insurance data and any other data. So they can move patients far more quickly through their centres because there's no paperwork to do, and they just walk out at the end of their consultation, again, with no more paperwork to do, again, speeding up the way that their patients interact with their medical centres. So it's a win-win, not just for the patient in terms of getting guaranteed bulk billing, it's also for the healthcare provider in that there's no paperwork and the throughput is accelerated by taking that pain point away from their receptions. So that's a very exciting project that's growing, and we can, after they finally get their last centres live, we can move on to look at other providers within the health services sector. So it's another sector that we've got covered, and our pipeline on the back of this is substantially growing, and we expect to be able to announce further, 7-figure contracts in the not too distant future. So not only are the new clients being very strong for us, the existing clients are being very strong and are moving forward. And creating recurring revenue streams with sticky clients. So it's existing is good and the pipeline is very strong. Next slide. So one thing that we are realising is that we are very counter-cyclical. I don't think anybody we're seeing in the healthcare, membership, hospitality, multiple industries, we're also going live with NGK spark plugs, the world's largest spark plug manufacturer, with bringing all their mechanics online. Fab Group, which is in the cosmetic and salon space, going live. That people are looking for bargains. They don't want to pay full price. They want to get 10% off, 20% off, 2 for 1, cheaper things. So we're seeing a huge uplift in our numbers, and the only explanation is, as times get tougher, people are moving more and more and more towards getting discounts and better deals, and we're seeing companies offering better options, better loyalty space. We've seen things like, not a client of ours, but Country Road, and say that 700 to 800 million of their sales come through their loyalty program. We're seeing companies like Myer say that their growth is down to the growth in their loyalty platform. And again, not a client of ours, but certainly, large companies are saying their way through this, emerging downturn is through loyalty, and is through offering their customers better offerings. So we think we're in a good space. We're going in a good direction. We're growing. We're signing new clients, and the future, I believe, looks rosy for us.